Investors are panicking about Google and Apple. So over the past several weeks, shares of the two companies are down around 15%, a sharp underperformance compared to the broader US stock market, which has been on an absolute tear. The reason these stocks are declining is because people are starting to get worried that Apple and Google are missing out on the boom in artificial intelligence and that more nimble competitors are going to eat their lunch. This concern is probably most acute for Google. You're hearing more and more people say that Google's days as a search monopoly are coming to an end because AI-powered alternatives are going to be the predominant way in which we find information in the future, and we won't need search engines anymore. Now, this narrative has been out there for a while. Ever since ChatGPT launched at the end of 2022, people have been speculating about what the next evolution of search is and what it means for Google. Of course, in response to ChatGPT, Google came out with its own chatbot called Bard, which later got renamed to Gemini. But the release of that product has been much rockier than the company had hoped. In some cases, Google's chatbot has given out inaccurate information, while more recently it got caught up in a scandal in which it was generating controversial images. All of this feeds the narrative that Google is dropping the ball when it comes to AI and that it's going to be disrupted by OpenAI's ChatGPT or some other competitor. Now, I completely understand these concerns. It does seem like we're on the cusp of a revolution when it comes to search, and that could have major implications for Google's business model, which today is highly dependent on selling ads in search engine results. And though the company has other business lines like YouTube and Google Cloud, these are a much smaller portion of the company's revenues and profits. So if we see a big shift in the way we search and we start to use search engines less frequently, that creates a lot of uncertainty about Google's business, and it's the reason the stock is sold off. Unfortunately, I can't tell you what the next evolution of search is going to be exactly, or how quickly it's going to be adopted, or whether or not Google is going to be a leader in whatever new paradigm emerges. I don't think anyone knows precisely what's going to happen. I will say though that I don't think this transition is going to happen tomorrow, and that Google has a chance to maintain its leadership position in whatever comes next for search. It has the people, it has the technology, and it has the money. Those don't guarantee success, but it gives them a shot. That's why I picked up the stock today for around $131 a share, which I think is a pretty good price in today's market environment. This is a stock that's trading around 18 times earnings, which is around 12% less than the S&P 500 and 29% less than the NASDAQ 100. Up until recently, Google had never traded at a discount to the S&P 500, so at today's stock price, you're getting the company at a pretty attractive relative price. That said, for me, this is a trade, not a long-term investment. I think the narrative for Google is going to shift back and forth between pessimism and optimism. When it looks like Google is going to be able to adapt and be a leader in AI-based search, then investors are probably going to bid the stock up. And when it looks like Google might be disrupted, they're probably going to sell it down. I wouldn't be surprised to see a decent amount of volatility in the stock until it becomes more clear what Google's position in the new search paradigm is going to be. Long term, I do think that Google is the most vulnerable out of the big tech companies when it comes to AI. So there is risk to the stock if the company can't adapt. But like I said, it has a relatively low valuation, so that gives you a decent buffer against things going wrong. And of course, there is the possibility that things go right for Google and it remains a leader in search for a long time to come. If that's the case, the stock is going to end up much higher from here over the long term. So that's Google. The other tech stock I bought today is Apple. The narrative surrounding Apple is a little bit different than that for Google. Yes, there is a worry that Apple is falling behind some of the other big tech companies when it comes to AI, and that's contributed to the underperformance we've seen in the stock. But there's also trepidation about Apple potentially losing market share in the Chinese market due to geopolitics and competition from local smartphone makers. Recent antitrust actions have also caused worries that Apple might be forced to open up its ecosystem, causing its devices to be more like Android devices, which in turn could make them less appealing to consumers and less profitable for the company. Those are legitimate concerns, don't get me wrong, but I think that Apple is going to be able to navigate those headwinds successfully. Long term, I think the company is doing everything it needs to do to stay ahead of the competition. We've all seen the strong initial reaction to the Apple Vision Pro, which to me shows that the company is making solid progress on developing the next major computing platform after smartphones, which is going to help Apple remain a dominant, highly profitable company for years to come. The stock's currently trading around 25 times earnings, which isn't dirt cheap by any means, but it's a discount to the NASDAQ and it's the smallest premium compared to the S&P 500 in about 3 years. Finally, I just want to say that none of this is investment advice. Most people are better off not trading individual stocks. If you own an S&P 500 index fund or you own some other broad US stock market fund, you already have pretty significant exposure to Apple and Google. There's no reason to run out and buy more unless you're an active investor and have a higher tolerance for risk. Hope that helps, and follow for more investing insights.